G'day everyone and welcome back to Pete's Investing. Today is April 7, 2023. This is the S&P 500 update. You can see here on the daily we're still in a fairly strong downtrend with the CCI 1500. On the 4 hourly we're in an uptrend, and likewise on the hourly. So we'll talk about each of these charts as we go through these. On the daily first, let's zoom out. You can see here I use the predominantly the CCI 1500, and it tells you back here it broke below the moving average. And that's where I avoid going long, even though the price kept going more in a bullish movement over those couple of months. It did tell you to be careful because the price was changing, and it eventually did to more of a downside, and we haven't broken up on a daily above the moving average yet. So just zooming into this where we are today, I've also drawn this key descending trend line, and you can see there it's respecting that trend line more closely. But also we've got this key resistance area at 41.41 and a support level at 38.31. So at the moment it's trending down with this descending trend line on the daily. Zooming in on the 4 hour chart, again it's in an up movement compared to the daily on the moving average of the CCI, but again be careful, it looks like it's bounced off that resistance area, and it's also trending and tracking down with this descending trend line. It may well break to the downside and consolidate within this wedge, and I've drawn another ascending trend line here, so it may possibly consolidate within this wedge. So it's currently just above the 23% Fibonacci retracement at 40.62 area, but you can see there, for it to break and be more bullish, we need to see it break above that resistance, and that'll probably change on the daily as well if it does that. But at the moment it looks like it's probably more of a weakening signal than anything. On the hourly chart, that Fibonacci is still in there. I just left it in there for reference, and also these ascending and descending wedge forming on these diagonal lines. Not much more to say on that apart from the fact that it's just tracking along that descending trend line. I will put in these fractals as a trading opportunity. Now if you are going to be trading long on this, again be careful, it's reaching this key resistance, so it may not have much further upside potentially. But if you are going to trade normally, you would trade the hourly based on the 4 hourly at least, but preferably all three timelines should be in the same direction. Now at the moment the daily is still in a downtrend, even though it's broken up through the moving average, so very cautiously going long. But let's assuming you wanted to enter back during this period, you can see there when it broke to the upside on the hourly, that coincided with the 4 hour period back in that level there. So let's assuming we entered back here during this period. I'll zoom in. Some trading ideas would be using fractals. So for example, when the moving average is in an upswing, and likewise the higher time frames are in alignment with that moving average, you want to wait for the candle to break above the fractal like it did there, and then wait for I'll usually wait for a percentage gain to take profits. I don't use moving average crossovers or anything like that. I generally take a percentage gain. So typically a 0.05% gain above that entry level. So you would have been closed out in some area there possibly. In cases where the price goes against you, just be mindful of, for example, in this case I wouldn't be going long at that level there, but let's assuming you went long there, I'd be using the average down approach. And to understand more about the average down approach, reference some links in the description below to get an idea of how to properly average down. And subscribe and like us on the channel, and support us more on Patreon, and we'll see you in a future video.